Struggling parastatals and concerns over governance keep the whiff of the credit rating downgrade circulating in the South African air, and the credit ratings agencies keep warning unless government embraces certain reforms to enhance growth, a downgrade to junk will become a reality. Joining us in studio to discuss this is Annabel Bishop, Chief Economist at Investec, and Professor Jannie, Rossouw, Head of the School of Economic and Business Sciences at Wits University. A very good afternoon to you both. Well, let's start off with you, Annabel. So what are some of the concerns do ratings agencies have about South Africa's, especially the parastatals?
Well, I think it really boils down to the creditworthiness of South Africa's government debt, and that's obviously what they're assessing, and in particular what's happening on government balance sheets. And I think the worry is the stress that's being placed on them by the government guarantees that's been extended to these parastatals. If you look at the statistics, this has really risen from around about the 200 billion mark in 2007 or 8 up until about the 550 billion mark. And I think the concern is, should this trajectory persist? You know, it's unsustainable, and certainly even at these levels it places strain on what is a very low economic growth economy.
Well, Annabel was talking about the government bailouts as well as guarantees. What was really needed in order to get the financial performance of these state-owned entities in order?
In short, Mashudu, they must be well managed. And if I say well managed, I mean you can't have friends of friends being appointed and think that something will turn around. If you look at SAA, for instance, I have all the guarantees that the government has given in the period in the past 10 years in this budget review, a very interesting document. The guarantees given to SAA was 14 billion at the beginning of this fiscal year. It will be at least, and I must underline, at least 19 billion at the end of this fiscal year. It might be even higher, because SAA is not able even to publish a set of financial statements. So how can you do business with a company that can't publish a set of financial statements because you don't understand the risk? Therefore, I've often said that especially SAA should simply be given away, and not to Dudi Mnyeni, I should stress, but to anybody who wants it and can run it properly. So in short, as Annabel has said, there's a contingent liability being run up. At the end of this financial year, this fiscal year, 31 March 2017, it will nearly be 800 billion rands in guarantees being given by government. Something goes wrong, government will be responsible for repaying this. So
it's government, and then it comes back to the taxpayers, which is you and I, as well as Annabel. And looking at a credit downgrade, we've had Moodys in town. They 50-50 chance that they will downgrade South Africa. But when you look at the scenario and looking at the economy, do you think that we'll get a downgrade, and what would it mean for ordinary South Africans?
Well, from Moodys, they've given us some comfort that at the moment, probably not. They do review us 3 times a year, they've told us. They're not anticipating giving us a downgrade in the near future. Certainly, we've got very deep, liquid financial markets. We've got a lot of institutional strength, which do pull us through. And of course, the fiscal consolidation outlined in the budget is a key strength for us and what could keep us on investment grade rating if we can fulfill that budget plan, and obviously if Pravin Gordhan remains at the helm as the finance minister, or someone who is equally as good as he is. Should we get a credit rating downgrade? Certainly in terms of Standard & Poor's and Fitch, we are on the last rung of investment grade rating at BBB-. If we drop down into the BB's category, typically what it means is higher borrowing costs. It puts pressure on our interest rates, and of course for those of us who have debt, that means a greater financial burden.
So what do we make? South Africans would be in a worse off position if this would happen.
South Africans will be in worse off position. We have an upcoming medium-term budget policy framework announcement on the 26th of October. There will be a lot of attention on that. But I must hasten to add that intuitively as South Africans we feel that President Zuma should care. If a president of a country should care, but I've reached the conclusion that he simply doesn't care for the country. He only cares for himself. So the last man standing between South Africa and the credit downgrading is Minister Pravin Gordhan, and of course he's very ably supported by the South African Reserve Bank and the National Treasury. And with Mr. Gordhan under his leadership, with these 2 institutions, South Africa can avert a downgrade. If South Africa gets a downgrade, we have to accept that we will not get a credit upgrade before 2020. As I've said before, South Africa should have a Vision 2020. This is a good country with a brilliant future. If we can simply survive the present presidency of President Zuma.
Well, looking at your growth rates in the second quarter, we get a bit of an uptick, 3.3%, market pretty happy, economists happy, so we're sitting pretty right now. But do you think that it can be sustained for the rest of the year, this kind of growth that we saw coming through?
I have noticed that the South African Reserve Bank has increased its growth expectation for this year from 0 to 0.4. Just remember that the growth of 0.4 really means on a per capita basis South Africans still get poorer because our population growth is about 1% per annum. So we really need rapid growth in this country to make inroads into poverty and to address our main challenge, which is unemployment.
Okay, well, we've had, like Jannie is saying, the South African Reserve Bank with rates yesterday keeping them on hold. There's now talk that they've come to the end of their rate hiking cycle. Are you also of that view?
Well, I think what the Reserve Bank said is it did hedge its bets. So it says we are possibly near the end of our rate hike cycle. So there could be one more small hike of 25 basis points and then, flat, or there could be flat. But I think that they're being cautious. What is good news is that they are less hawkish than they have been. So by indicating a potential end to the rate hike cycle, that's positive. So they're really moving towards a neutral type of policy stance. We don't know what's going to happen in the next few months. We could get a big blow up and the rand depreciates enormously and suddenly it's off the table. If we continue as we do, we think possibly we will plateau, and it might be, maybe another 25 basis point hike. As I said, the US is still meeting in December. They're expected to hike. But it is good news that possibly this upward interest rate trajectory is nearing an end, given the great financial vulnerability that households are under in South Africa.
Are you as optimistic about economic growth as the South African Reserve Bank seems to be?
Well, we're talking minor fractions here, and 0, 0.3 and 0.2, all very
we'll
similar.
Take the positive.
Yeah, but, we did have 0.2 as our forecast. We may possibly change it to 0.3. In the light of us being at such a tiny growth rate, it seems like it's important. But, generally, as you progress through the year, as you get each quarter's data coming through each month, it's normal to make tiny little fractional adjustments. And that's what it really is. It doesn't really mean there's been a phenomenal change. In fact, 3.3% quarter-on-quarter CC adjusted annualized in the second quarter was the outcome for GDP growth, but on a year-on-year basis it was around about 0.6, 0.5. It's probably what this year is going to hold.
Well, Annabel's talking about the US Federal Reserve and possibly a rate hike coming through at the end of December here at home, like we say, possibly no more rate hikes or even a 0.25 basis points hike coming through. Your thoughts on the interest rate outlook for the remainder of the year?
The interest rate outlook for the remainder of the year will be driven by inflation expectations. Currently, we see subdued inflation expectations, but if inflation expectations turn around and and inflation starts accelerating again with feed-through effects, the Reserve Bank will have no option but to increase interest rates. If we can have good rains this year, a normal agricultural season, we do not see rate hikes in the US, and if we see a continuation in the appreciation of the exchange rate of the rand, there's capacity to get through the year without a rate hike.
Okay, and looking at, thank you so much, looking at the emerging markets as well as South Africa. Let's say the US Federal Reserve decides, okay, we'll give you a nice Christmas present and give you a rate hike. Not a lot of people will like that. But what does it mean then for South Africa as well as emerging markets going forward?
Well, the interesting thing is rather what are market expectations in terms of this rate hike. And we obviously do see a great impact, as you say, on emerging market currencies, particularly on our rand, when the expectations change of what the United States is going to do with its interest rates. And at the moment now, there is a very strong expectation they will hike in December. So there's probably going to be less rand depreciation or currency depreciation generally from emerging markets if that transpires, and of course if as we approach that meeting the expectations hold and the Fed funds rate is expected to increase by that amount still by the market. So it's very much in terms of market probabilities and expectations. What is quite important is that in the latest release of the FOMC statement they released their usual dot plot graph, and it certainly showed, adding in the year 2019, that we actually seen a subsidence in interest rate expectations, and this has actually been quite a persistent trend since 2014, if not 2013. So the fact that the long-term projected interest rate environment for the United States, projected by the members of the Monetary Committee themselves in the United States, is subsiding and becoming lower and lower the further we go out, indicates that it could continue to stretch and could continue to deliver less than people expect. So from that perspective, that's also a positive for our currency.
Oh, we'll have to leave it there. Thank you so much for joining me this afternoon. That was Annabel Bishop, Chief Economist at Investec, and Professor Jannie Rossouw, Head of the School of Economic and Business Sciences at Wits.